Nobody used the term volatility on the way up. They only used the term on the way down. So I guess there's good volatility and bad volatility. I would say things probably now are less volatile than they were on the way up, because we were regularly seeing $3, $4, $5 days in silver. Uh, Now it's been a slow bleed of, $2, $3, 75 cents, whatever. But it's to the downside, so it's volatility that people don't like. Where we are now, we are in the bottoming process. This has lasted a little longer than what I had expected. Uh, but I want to tell people this is and we've had many, many of them since the year 2000, 2001, when gold and silver bottomed. We've had many, many gut checks, but this is just another gut check. And you've got to ask yourself, why did I buy gold? Why did I buy silver in the first place? Do you know why you own gold or silver? Do you own gold or silver because it was going up or because you thought it was going to go up? First off, gold and silver don't do anything. They don't go up, they don't go down. They are a piece of metal that we've been fooled into pricing in fiat terms, in dollars, in yen, in euros, what have you. The way it should be, the price should be quoted is right now, the dollar is 1/4,000th of an ounce of gold. 25 years ago, gold was 1/300th. If you look at gold as being priced in dollars, it's not as shocking that the price is going from 300 to 4,000 or 5,600, whatever the high was. But it is more shocking if you're looking at the dollar that's being priced by gold going from 1/300th to 1/4,000th. That's a complete and utter crash of what's the number, 93%, whatever, loss of purchasing power versus real money in 25 years. But yet, that's not the way it's viewed. It's viewed as, oh, gold's going up or silver's going up. And that's not the case. Getting back to the gut check, you need to go back to the first time you bought an ounce of gold or bought an ounce of silver. Why did you do that? Were you worried about the finances of the U.S. government? Were you worried about the finances of the government, whatever country you live in? Were you worried about fiat melting down? Well, that's what has happened and has been happening for the last 25 years. So we get this pullback. People are pissing in their pants because 6 months ago, we were not even 6 months ago, 4 months ago, 5 months ago, we had much higher pricing or much lower pricing in the current currencies. Gold and silver were due a correction. They were absolutely due a correction. Were they due the correction we've seen? I think it's way overdone, especially in silver. But if you understand why you own the metal and what the purpose of having capital outside of the system, you should be able to relax a little bit. And if you have funds that are still in the banking system or still in the system, now is a perfect opportunity to get those funds out of the system, into metal, into your hands with no counterparty risk and no default risk. And that's the key, no default risk. We live in a world that is basically insolvent. I don't think there's a large central bank anywhere that is healthy. And I can say that because we know the U.S. Treasury / Federal Reserve are not in healthy positions. the Treasury now is paying $1.5 trillion in interest alone. That is the biggest category of spending other than, I think, Medicare. Or I'm sorry, not Medicare, but Social Security. It's bigger than defense. It's bigger than anything else. And it will only grow, especially if interest rates go higher from here. It's going to grow much, much faster. If you look at the Federal Reserve, they have a negative equity position at this point. I looked at it, I think it was 4 years ago, they had $65 billion in equity, and interest rates have gone up since then, and their bond portfolio has cratered. The number is what, $300 billion or whatever. So they've got a negative balance sheet. As far as other nations are concerned, what do they use? What do the other nations' central banks use as their primary reserve? They use dollars that are issued by an insolvent entity. So you're looking at a financial system literally with no foundation at all. And when this is all said and done, people are going to find out that the only monetary foundation you can have is something real. Now, it doesn't have to be gold, doesn't have to be silver. It could be a commodities basket, like the BRICS are proposing. But in that basket, they're proposing that 20 to 40% of that basket be gold, and then of course silver, and they're going to have oil, etc., etc. But the bottom line is, we've been living in a fantasy world for however long, because the currencies are nothing. The currencies are, they have no backing other than from the issuer, and these issuers are insolvent.
An article that just came out in June saying gold overtakes treasuries as the number one holding of foreign central banks.
For two reasons. One, because the central banks are buying gold. They're buying it voraciously. And the other reason, the price of gold has gone up, or the value of currencies have gone down. That's why gold now is a larger percentage of dollars. But there's a lot of governments out there that don't own gold, that still have 100% of the reserves in dollars. An example: I lived in Costa Rica for 5 years, from the end of 2006 to 2011, and by 2010 or 11, I'm thinking to myself, okay, so this country's 100% dollar reserves. When the dollar melts down, what's going to happen to the Central Bank of Costa Rica? It'll be total chaos. So again, going back to the financial system needs a real foundation, and there's no foundation. And the derivatives have built up, dramatically since the 2008 great financial crisis.